What's good, everyone? Welcome to Street Alerts. I'm your host, Chris Correa, and this is the market breakdown for Monday, November 22nd, 2021. This is the midnight report. Now, if you're new to the channel, I want to say thank you because this channel would not be a channel without you guys watching and actually tuning in and following me. So shout out to you guys for allowing this channel to even be a channel. Now, every day, the market is giving us signals, opportunities, and potential trades. And every day I try to bring those potential trades and latest movement on Wall Street to you via this channel, where I talk about the stocks and the sector movements that are on my radar and alert you guys to what I see. Now, a bit of a background on me. I used to be a professional trader. I used to trade with one of the largest banks in the world, but I'm no longer a professional trader. I trade my own portfolio. I consult for private clients who want to learn how to trade and invest the way that banks do. So this channel is not financial advice. I'm not here to tell you what to buy or what to sell. I'm here to share my insight on what I see and help educate you the best way that I can, using my experience of more than 15 years in the market. And again, give you my take on what I see going on and share with you the stocks that I'm watching and the sectors that I'm looking at. That being said, let's start off by talking about the markets, and then as usual, we get into the individual stocks and we pull up the charts. So here's the thing, guys. It's Thanksgiving week. All right. What does that mean? Well, the big boys are off on vacay right now. Okay. The big hedge funds, all the big players in the money, the big money players, okay, on Wall Street. They're out of the office and they're probably relaxing right now at their vacation homes or whatever it is they're doing. So we'll probably see the markets with small gains, since a lot of the real action players right now are off of the court. Now, remember, the market is driven by a lot of the big institutions. Okay, they drive the market. So if they're out of the office, that means that a lot of that volume is gone. And usually during Thanksgiving week, you see the market make small, subtle gains every day until next week, when everybody gets back to the office and Wall Street gets back to normal and the big money players return to the markets, until about Christmas time, when again you see the big money players dip out of the market, go on vacation during Christmas week until the new year when they come back. So that's probably pretty much what this week is going to be like. Okay. That being said, last week we saw some big moves in the 10-year yield. And I've been telling you how important it is that you look at those yields every day, because that's going to give you the signal and the sign on where the market is going. Now, I want to talk about China today. And the reason I want to start talking about China is because I believe that China could potentially be a catalyst to a stock market crash. Okay, there's a lot of things going on, but China is right now one of the big economic factors that we have to consider. You guys remember a few weeks ago when everyone was panicking and worried about Evergrande? Oh, what's going to happen? You know, are they going to bail them out? Right? All the talk and the concern about this company Evergrande was really frightening the market, you know, about what was going to happen to the Chinese economy over them going belly up. But that's just one company. There are many of Evergrandes out there. I mean, think about it. China is building cities with no one living in them just to keep the people working, okay? There are like 4 or 5 companies in China setting up just like Evergrande, all with tremendous debt. And make no mistake, okay, this is going to be a big problem. Even though this is primarily a Chinese problem, it will no doubt affect us here in the States. And the stock market will feel the shockwaves of that kind of financial repercussion. Okay, so that's number one. Now, I want to talk about a crash, not because I'm a doom and gloomer, okay, but because first and foremost, this channel is about educating you so that we don't lose money and try to make money in the market. You cannot do that if you don't understand geopolitical movements, if you don't understand economics, okay, and if you don't understand history. Now, I'm a big believer that history repeats itself because so many don't know their history and they repeat the same mistakes over and over and over again. Now, every crash pretty much happens the same exact way. You first start off with inflation, which is what we have. Usually this is seen first in energy. Okay, this is the first taste that people get of it. They can physically see it when they go to the pump. Okay, things like oil. People see gas prices going up to the point where it does start to actually affect their budget. Okay, gas prices go up and they start driving less. Then this affects transportation at large. Then this affects shipping. And this is a cue that inflation is happening. That's where it starts. It's like a small fire, okay? Now it eventually moves from people noticing the gas prices going higher to the prices of goods going higher. Inflation spreads and it starts affecting the cost of the goods, starts affecting the cost of food prices. Restaurants start slowing down and the prices pretty much keep rising everywhere until people can't keep up with inflation because their wages aren't rising the way that inflation is going up. Now, eventually you end up going from inflation to deflation because people can't afford goods and the prices are no longer at levels that, again, people can afford. The only reason we have been able to go through inflation how we're going through now is because of all the government subsidies that we have, all the stimulus programs that we had in effect. Most Americans are in heavy debt. But for a year, we had programs where people didn't have to pay their rent. They could live rent-free for a year. So these programs are the only reason why the market is still moving higher. Stimulus money. Now, one of my mentors over the weekend was talking about how people don't recognize just how bad stimulus is to the economy. No one views it as a real serious economic threat. Now, economically, stimulus is pretty much life support to the economy. Okay, think about it like this. If somebody called you, let's say a family member calls you and then they tell you that your uncle is on life support down at the hospital, you would know just by hearing the words life support that he's in pretty bad shape. You wouldn't just shrug it off like it's a minor injury. And stimulus is just that. Stimulus is life support to the economy. It means that the economy can no longer support itself and it needs intervention to keep it going, just like a human being on life support can no longer function normally, so the life support keeps him alive. But no one understands this when it comes to the economy. They think that as long as the government can keep printing money and sending out checks, then we're fine. There's not a problem. And so the Fed does just that. They keep rates at zero. They keep printing and they keep sending the market higher and higher by pumping more money into the economy because, again, the economy can no longer pump money by itself. It's life support. But eventually, the inflation from all of this printing gets so high that the consumers get to a point where they can no longer consume the way that they have been. They have to stop consuming. They have to stop buying certain goods. Maybe they stop buying big trucks because they can't afford the gasoline. Maybe they stop eating out because it's just too expensive. So eventually, the consuming stops. Now, what does this cause? Well, now the retailers and the manufacturers are noticing that people aren't buying as much stuff as they were because they're seeing that sales are down. The buying is drying up. So now they start to feel the financial effects and the revenues start getting hit as the demand for goods slowly starts to come to a stop. And that's where you get the next step of inflation, which is deflation. But this is very important, okay? It's very important that we understand this because this is what leads to all crashes, okay? The dot-com crash, the housing crash, it all comes from this demand, okay? Before demand stops, what you see happening is the encouragement of using your home as an ATM machine, okay? People start pulling equity out of their homes. And if you remember last week when Powell came out and said that he's not going to raise rates, but instead he's going to taper for 2 months. So the folks at home can now go and pull out some money from the home equity. That's step 2 of the inflationary cycle. Okay, and this is where you need to be aware, or you should be aware, that we're getting closer to a stock market crash. Okay, this is the second thing that happens. It's a big push that tells us people are out of money. So now you have consumption slowing down, and you have people pulling money out of their homes. The goal is to try to get people to continue to spend money. Eventually, though, just as stimulus isn't enough, the home equity isn't enough, which is when you move into deflation, where prices start coming down. Now, before we talk about prices coming down, it's important that we also have to understand about these record sales that we've been hearing about in the financial news. And when they say the demand is up and they say the retailers are breaking records in sales, what they're not reporting is how many units are being sold. How many units did they sell? Did they sell more units and that's why they're making money? Well, most of the time what you find is that the units being sold are actually less. And the way they're reporting the record sales is that the cost of the units are higher. Okay. In other words, if you had a lawnmower store and last quarter you sold 500 lawnmowers for $1,000, but the following quarter you sold 250 lawnmowers, but you sold them for $2,000. So you're basically break even. But as a business owner, you would know that what is going on is actually nothing more than inflation. You actually sold less units. The only reason you broke even is because the price of the units was higher than before. And that goes back to what I said about rising prices on goods during inflationary times, which is where we're at now in the inflationary cycle. But you won't hear the financial news reporting, all of this. Instead, what you're going to hear is record sales. The reality is that the units being sold are less. Okay, they're not selling as much units. But if they did report that, then everyone would know just how much we're being affected by inflation. And what follows all of this again is deflation. Now, going back to deflation, the goal of this is to drop prices so that people can get back to buying again, okay, to entice them to go out and start buying stuff. But how are you going to get society to buy stuff when they don't have money? If you can't afford gas prices, how are you going to buy a new truck even if it's on sale? So this is where we get to the point of, where the market no longer is moving higher, even with falling prices. That's where you get some real problems. That's where you start seeing layoffs. Now, every crash ends up the same exact way and it builds up the same exact way. Okay, they all follow this pattern. You get big inflation in the beginning, gas prices, oil prices, but again, all of these things they have in common. Okay, if you take the .com crash and the housing crash, they both had big rallies in the market. They both went from inflation to deflation, and they both also went from energy demand being high to being low. You had people not using as much energy. Right now, prices are rising everywhere. And what we see is that this is also going on with the market, okay? The stock market is the gauge that is showing us the effects of all the money that's being printed. Same with home prices. Same with gas prices. It's all the same. All around us, prices are rising. And again, that's phase 1 of an economic crash. Prices have to rise. Phase 2 is when the rising prices turn and actually they start falling. That's where you start getting very close to a crash. Now, the big problem we have right now is that no one is looking at the Joker's wild card, and that's COVID, okay? You guys see all of the stuff going on in Europe over the weekend, right? The lockdowns that were happening in Austria, and that may be even happening, may be adopted by Germany. Now, if you take what's going on in Europe and that starts going on here in the States, it could be a catalyst to a crash. But here's the thing though, we don't need a lockdown to actually have a crash. That's another thing that people don't understand. For example, when it comes to high prices, not all of it is due to inflation. Okay, the biggest reason why our energy prices were higher wasn't actually because of inflation. That was because one of the first things that Biden did on his first day in office was shut down the Keystone Pipeline. And he also put a stop to a lot of oil and gas production on federal land, not to mention numerous regulations that he set up on oil production. So if you want to know why prices were rising in energy, that's why. Okay, shut off production. We're now once again dependent on foreign oil to feed us energy because of Biden shutting down production, and thus you get higher energy prices. And this is the same guy who supposedly is going to fix the economy. That's another topic for discussion. But moving on, again, over the weekend, I saw Austria was going into full lockdown, and Germany is thinking about following the same exact model. If that happens and this lockdown starts spreading across Europe, you're going to see the financial shockwaves hit our economy. Okay, now I've been telling you about inflation, been talking about deflation, been talking about falling prices. What do you think happens in lockdowns to oil production? Okay, people have nowhere to go. And even if they did, they're prevented from going anywhere. So you get demand for crude oil going to zero. The economy pretty much stops as the demand for energy hits the brakes. Because if you don't have energy, you don't have an economy. You don't have production. Energy is the lifeblood of production and the economy. No energy, no economic activity. Look at what happened when we dropped like 30% in the market back in February 2020. Okay, we don't need to have our economy locked down in order for us to have a crash. All you need is for lockdowns to happen in Europe. So the problem that we'll have here is, again, energy that's been steadily climbing, now hitting the skids, and prices begin to fall, which again would reveal that European demand for crude oil is now zero and offline, at which point you'll see everyone run to the bond market looking for safety. And again, that's all it takes to have a crash. So if you're paying attention, then look at how the setup is starting to unfold here. Okay, we got a little over a month and a half left until the new year. So you should all be watching all of this movement, because if we do have a crash, these are the ingredients for a crash. Okay. Plus, again, how I mentioned in the beginning, of the video, you have China with massive debt that's piling up. And again, the financial news isn't really reporting any of this. Okay. My guess is we should know in January just how much closer we are to a crash. So continue to look at the yields, and that's going to tell you a lot on where we're going in the markets. Okay. Now, this pretty much concludes my analysis on the market in general. If you enjoyed the video, click follow. I'm going to be dropping a lot more of these videos, as well as what I am trading and what I'm looking at in the market, and also be doing live streaming. Okay, I live stream on Twitch, and right now it's looking like I'm going to be live streaming probably stock market scans on Monday and Friday afternoon. The schedule's not exactly set yet, okay, but in the next coming days I will be getting a schedule more intact, and by next week I should have something solid. But for sure, follow me if you do like these market breakdowns, because again, these are going to be happening much more frequently, where I share what I'm looking at, where I share what what may be happening on the market, because again, this affects your money. Okay, and the whole point of this channel is, number one, that we don't lose money. Number two, we try to make some money. Okay, we want to minimize our risk, keep our rewards large, and we want to be aware of all these economic conditions. So again, guys, if you enjoyed the video, definitely click follow, and I will be dropping more videos to come.